Hello, Market Club members everywhere. Adam Hewison coming to you from a very wet and dismal day here in Maryland. But it's Monday, the 1st of December, and start of a new month. And this is the month you have to be careful in, because this is the month when things can get very quiet and markets can move irrationally. Not that they haven't done that before, but the market gets thin after the second week of December as traders think more about the holidays as opposed to trading. But I want to bring to your attention a couple of things I've seen in the marketplace that I think you should be aware of. We're going to be looking at Vector Gold Miners ETF. The symbol is GDX. And what I want to share with you in this particular ETF is look at how gold's made new lows, but look, we are sort of stuck in this range here at the bottom where it's found support and it's had a pretty good bounce in the past. From, let's say, 13 to almost 16 and a half. Then you've gone from, let's say, 13 again up to almost 17. So percentage-wise, it's a nice move. And the one thing I can see here also that is interesting that I want to bring to your attention, and let me just clear the screen and get a drawing pencil on here, and that is this factor. If you look at the RSI indicator, which is what we have on the screen right now, RSI, and you can see, look at how this line is going like this. Okay, it's definitely sloping on the upside. But if you look at prices, we're actually going like this. So we were making, this is the lowest it's been, but actually the momentum was rising during this time period. So again, you're very close to the 50 line. I definitely want to watch that. I would definitely like to see it close over 14. If we close over 14, I think we're going to see a pop, probably up to 16 and a half or even higher. But the universal idea behind gold right now is negative. No one's positive on gold. And oftentimes when you have such a imbalance in terms of people bullish and bearish, it tends to be a reversal coming in. And look at our score. 55, a trading range, so be careful there. Again, I would watch this very, very carefully, because if you have turned over the parabolic, you can see this line right here, you've moved over that, so a little momentum coming into the market. And if I close this, clear this up and go a little further down, you'll see also the MACD, which is right here, just turned positive. That's the first time since it has done that, since it turned down right around the 16 level. So again, it's definitely something to be watching during this time period. Much the same with the other ETF, GLD, which is the Spider Gold shares, is the most actively traded. You can see here, again, you have this momentum play where you have prices. It's probably a lot more evident on this particular chart than the GDX, but you can see prices are going down, but momentum is going up. This is a divergence, which means that there should possibly be a reversal coming into this market very soon. Plus, you're very close to crossing over on the MACD, which is right here. So again, you've got the RSI, that's a divergence right here, and then you have the MACD, which is very close to turning around. Every time it has turned around, like here, you can see it did swing up quite dramatically, and also here also it did swing up. So again, watch these indicators very, very carefully. Okay, this is spot gold, and you can see it's probably more evident here, the divergence we're seeing on spot gold, than anywhere else. Again, you can see lower prices, divergence, momentum going up. It's losing momentum. Every time it's going down, it's losing momentum. And you have turned over, crossed over the line here. And that's the first time we've done that in quite some time. Last time we did that was way back here, and you can see what happened. We had a nice rally. So be on the lookout for a rally in gold. That's what we're saying right now. Let's take a look at the other markets. The Dow Jones, pretty much a mixed picture. You can see we've talked about this before. You have really massive resistance over this market right here, and I'm not sure whether that's going to be taken out. We have very thin markets, as I said. It could be, but vice versa, I think it's going to be, my gut feeling is that we're going to turn down. I don't know why, but that's just what I'm feeling. Now the S&P 500 has plus 100. We had the weekly kick in today at 2,097, so all of our indicators are positive. We are above the 50 line, so yes, that does look good. And the MACD, on the other hand, has not turned up, which is a little bit disconcerting at the moment. On the NASDAQ, a mixed picture there. You have the monthly negative and the weekly and daily positive, so it's 70 plus 70, more or less a trading range. Again, we really have to overcome these highs back here, because I think that's where the last level of real resistance is for this market, and it's just right around those levels there. So you've got this level right here to contend with, plus you have the other higher level to contend with. So I think people are getting a little bit nervous. It's going to be the end of the fourth quarter at the end of this month, so we may see some shenanigans going on in the thin market. So let's watch that carefully. The Eurodollar, everything's negative there, but again, you're sort of flattening out on the RSI, and it's sort of trying to make a turn, but we've sort of hit the target zone we were looking for. Let's see how that plays out on the upside. Crude oil, again, you've got this sort of flat picture here, nothing going on that's dramatic. You can see it just really up one day, down the next, up one day, down the next. So, but right now you are above the parabolic, which is a little bit positive for this market, but we're still below the 50 line on the RSI. By the way, we have posted a lesson on the RSI, which I highly recommend you take a look at. I think you might enjoy that. Hey, I'm Adam Hewison. Take a look at gold. I think it's going to be interesting. I'll be back tomorrow. Have a great trading day, everyone, and thank you for watching.